everybody, welcome back to the Bitcoin Layer. Today we're going to talk about Bitcoin's latest price decline and why we don't think that it changes anything about the investment case for Bitcoin. When we look at Bitcoin's price history, we can see that Bitcoin has had enormous price drawdowns many times in its history. So today I want to talk to you about the behavior of the Bitcoin market itself and why these drawdowns are actually just part of Bitcoin's cycle and part of this new asset class that the world didn't even have 14 years ago. So yes, Bitcoin's price has declined 75% over the past several months, but let's now take a look back at Bitcoin's history. Bitcoin started in 2009. By 2010, Bitcoin started to discover a price. And by 2011, Bitcoin experienced its first major price pump to almost $30. Now, once it got to $30, Bitcoin saw a 94% decline, a 94% drawdown in just 5 months, down to about $2 from just under $30. Now, this was a very important time in Bitcoin's history because it established this precedent that Bitcoin can go down over 90% and not die. And it didn't just not die. Bitcoin didn't increase by 10x or 100x or 1000x since that point. Bitcoin has gone up 10,000 times since the 2011 original price crash for Bitcoin. Now, fast forward a couple years to 2013. This is when we had our next major pump in Bitcoin. The price got to above $1,100. Then we had the Silk Road drama, we had the Mt. Gox hack and collapse, and all of these factors made Bitcoin enter this extended bear market that lasted well into 2015, and Bitcoin saw during that time an 85% drawdown. Now, Bitcoin is over 100 times the value of the low point from 2015. So once again, anybody that declared Bitcoin dead during this bear market of 2013, 14, and 15 was proven wrong as Bitcoin started to really exhibit this cycle nature of bubble and bust. Now, it's not a bubble in that it comes back even bigger the next time, but there are associated bubbles with this cycle in Bitcoin as Bitcoin goes up and down dramatically. So before we get into analyzing this entire cycle of Bitcoin over its life, let's talk about the 2017 run up in Bitcoin price. So in 2017, the price of Bitcoin got almost to $20,000, just below, and it then declined by 84% down to just above $3,000 over the 12 months after that. So from about December 2017 to December 2018, we saw this 84% drawdown in Bitcoin. Now at this point, the Bitcoin bubble bust cycle is starting to become the norm and not the exception. Now, do you guys remember ICOs? ICO stands for Initial Coin Offering, a play off of the initial public offering terminology that we use when a company goes public and starts to issue equity. In 2017, we had this huge ICO bubble and it burst. And when it burst, it did bring down the price of all digital assets, Bitcoin, alternative cryptocurrencies, and all these new ICOs that really nobody understood what they were. Not only does this asset class attract scammers, but it also attracts terrible ideas. For example, the ICO bubble was just another attempt at creating equity in an unregulated way, and the SEC basically came and shut the whole thing down, and it caused a lot of losses for people that had invested. So you have terrible ideas, and then you have a lot of malinvestment, which is just another way of saying a misallocation of capital. When people decided to invest in ICOs in 2017, they were making a grave mistake, but people don't realize that at the time, as there's all this hype and bubble sort of hysteria that comes along with when Bitcoin goes up from $170 to $20,000. It's just going to bring all of this hype and all of this hysteria bad ideas, and malinvestment. Now, all of these bubbles eventually come crashing down, but what survives in the end? It's Bitcoin. Bitcoin has remained the number one digital asset by market cap throughout its entire life, has never been replaced, and has never seriously been threatened over any long time horizon. Now, let's look at the latest drawdown. Bitcoin's price reached about $70,000 last year, and as of a couple weeks ago, came crashing down all the way below 19,500, its previous all-time high, to touch the $17,000 range. Right now, it's back up above $20,000. So the drawdown from all-time high to the level that we saw in June was, again, an enormous decline, this time of 75% over 5 months. We don't think you need to worry about the Bitcoin price declining by 75% if you really step back and think about the behavior of buyers and sellers in this Bitcoin market from its infancy. When you zoom out and look at these drawdowns over a long-term time horizon, we are seeing that the drawdowns are getting progressively less severe as liquidity increases in Bitcoin and more people are aware of what the asset represents. So let's talk now about the Bitcoin layer's fair valuation framework. This is how we think about Bitcoin's value. We're using 3 metrics here. One is realized price, which we've done a video about recently. Go check out that link. We have also used the 200-week moving average, which is just a basic technical indicator, a long-term average price. And we also have our own proprietary metric called electricity hash value. And this is a way of translating Bitcoin's energy that it's consumed into a raw input price. So we've used hash rate, the efficiency of the going miners in the market, and an average electricity price to come up with what we believe are the input costs to creating Bitcoin. So we have these 3 metrics that we're using. And if you look at Bitcoin's price today, it's floating right around a couple of these metrics. Now, we've taken these 3 metrics and we've averaged them in a basic average into what we're calling our Bitcoin layer confluence price. We also have our fair value ratio represented in this graph. So you can see that our confluence price today is right around $20,000, right around where Bitcoin's price is today. But look down at the bottom panel, and what you see is our fair value ratio. This is simply the ratio of Bitcoin's price to our confluence price, which is an average of these valuation metrics that we're using. Now, when we look at Bitcoin over a long time horizon and think about the boom and bust cycle that we see in digital assets, it makes sense that Bitcoin will experience a dramatic rise relative to its valuation metrics during bubble phases of the cycle. The ratio will come crashing down as Bitcoin's price declines as other things go bankrupt in the space. Like, for example, during this latest phase of Bitcoin's price decline, we have bankruptcies and liquidation from certain hedge funds that have taken outsized and over-leveraged bets on either Bitcoin or Bitcoin and alternative cryptocurrencies that have collapsed. Now, when the fair value ratio, this ratio between market price and our confluence price, comes back down to 1, it means that the downward trend has pretty much exhausted itself. And that's what we believe is happening right now in Bitcoin. We have a ton of bad news, we've had huge liquidations, and we've finally started to see the bad news not having an impact on the Bitcoin price. Like we've seen a few bankruptcies over the past week or two as Bitcoin has actually grinded higher in price. So we're not out there to call the absolute bottom of Bitcoin's price at 17,000 and change, but we are here to say that if you look at Bitcoin's price history over a long-term time horizon, we can see that Bitcoin goes through these enormous drawdowns, and in the end, Bitcoin eventually recovers due to its exponential adoption across the globe. Statistics show that there are between 100 and 200 million Bitcoin owners or users across the world. We believe at the Bitcoin layer that that number is going to 1 billion people and beyond as Bitcoin follows an adoption curve similar to the internet. Join us next time at the Bitcoin layer for more analysis on all things Bitcoin and global macro. I want to thank my sponsors, Zebedee and Voltage. I'm really excited about partnering with Zebedee. They are building what I believe is a really important user experience for people that are onboarding to the Lightning Network. Now, Zebedee is a company focused on the gaming industry, so how does that fit in with global macro? Well, you guys know how much I believe in the Lightning Network, and I believe that what Zebedee is doing is it's introducing the Lightning Network to people in a way that makes them understand why instantly transacting Bitcoin is so important. So check out our Lightning address, the Bitcoin layer at zebedee.gg. Go download their new wallet for a great first Lightning Network wallet and get your own Lightning Network address. I'm proud to have Voltage as the sponsor of my Substack. Voltage is powering businesses to be able to run their own nodes, both Bitcoin and Lightning Network. I'm really excited about working with Voltage because I believe they are powering some of the most important businesses in the Lightning Network ecosystem already. Go check them out.